How to invest in stocks when you start. Generally speaking, when we talk about investing, the first thing that comes to mind, it's a very complicated area, especially the stock market. Indeed, with all the graphs, curves, and figures that we see, it is very easy to get lost, but do not worry, we will help you to see more clearly. Assuming for a moment that you own a business and their role speaks to you needing more money to grow. Where are you going to get that money? So the idea is to break your business down into small parts and then sell your shares and keep the majority so you don't lose control of your business. This is what the stock market is for, and this process is known as the IPO. In this video, we're going to talk about how much money you're going to be able to make by starting to buy and resell those small shares that are actually nothing but shares in companies. So follow the video in its entirety to understand the process of a follow-up of large companies like Facebook or Apple, and to be able to reproduce it by yourself later. Enjoy as long as it lasts. Don't miss the opportunity. Here we go. But before we get started, make sure to hit the subscribe button and turn on the bell icon. This will help more people with the informative content of the video and motivate me to produce more content. Take the example of the creation of Mark Zuckerberg Facebook's. The company went public in 2012 with 337 million shares. Each of these shares is worth $38, but very quickly he realized that there were many more people who wanted a share of this company. So he added another 84 million shares for a total of 421 million shares. And guess what? He sold each of them and raised about $16 billion. He literally became a billionaire in just a few hours. Indeed, on the first day of the sale of the share, the price of the share went from $38 to $45. Facebook seems to be on the right track, but we should not rejoice too soon. Finally, the stock dropped to $38 at the end of the day, and that was only the beginning. In the weeks that followed, the stock collapsed to $20, nearly half of its IPO price. Now, to better understand what is happening here, going back to the origins of the stock market, the shares were originally purchased to receive a portion of the company's profits. In theory, buying a share, therefore, means owning a share of a company. This means that you are entitled to a portion of the company's profits just like other members of the company. In the case of Facebook, if you bought Facebook shares in January 2017, you will now know ownership of a Facebook share, exactly like Mark. So if the Facebook company generated $15 billion, how much are you going to make? In January 2017, you will have spent $1,300 to buy your 10 shares. Today, there are almost 3 billion shares present on the market. I doubt that your 10 shares could bring you a lot of money based on the profit of Facebook currently. But let's stay optimistic. Indeed, if we calculate net income by the number of shares, each share should yield a little more than $5, which is called profit per share. In other words, your 10 shares are supposed to make you about $54. Not bad, isn't it? This still remains a guess because in reality, you get nothing at all. The board of directors will decide what to do with that money and whether you receive money for your shares or not, which means no one cares about you leaving. But don't worry, there are many companies that always remunerate you, no matter how many shares you have. For example, no more than last year, almost $13 billion worth of profit shares were paid by Apple to share owners. If you had Apple shares, you would have received about $2.50 for each share. Of course, it's not much for a $117 share, but it's always better than nothing. However, today the amount paid by the company is as important as the value of the unit. Apple shareholders saw a 33% increase in a single year, which means the stock went from $120 to $160. It's a much better result than the market average. You've probably already heard that Apple is the first company to break the $1 trillion valuation barrier because his stock price went over $200. Did you know that in June 2014, the price of the Apple stock was worth $645? Does this mean that the company was already valued at more than $3 trillion? This stock market is definitely not easy to understand, so I'll give you more explanation. Today we have the opportunity to split our shares. which Apple did. The price of each share is divided proportionally into 7 pieces. Practically nothing has changed it, except that more people can afford shares and join the Apple investor community, now that the stock is $92. But not all companies do that. Some prefer to work only with serious people like Warren Buffett. His Berkshire Hathaway company never split its shares. It owns only 1,680,000 shares, while Apple owns 5 billion. That's why a single share of the Berkshire Hathaway Corporation costs over $300,000. I guess most of us will never join the Warren Buffett investment firm, but don't worry, Buffett thought of everyone. He created Class B shares worth $200. That makes them more affordable. If you're still watching this video until now, you're having a great time with us. If you want to have more videos with more secrets about the world of finance, put in the comments, "I love investing," what you see on the screen. Don't forget to subscribe, and you'll have taken the first big step towards your financial freedom.